Good afternoon, everyone. My name is Cinosi. I'm an attorney specialized in blockchain investigations, and I'm the regional ambassador for the Association for Women in Cryptocurrency. It's a true honor to be moderating today this panel on institutional predictions and what's next. We have 4 great panelists, so we're lucky to have them, and they will bring unique perspectives on their different industries. Today, I'm joined by Silvio Pegado. He's the managing director of LATAM at Ripple. Nisarg, he is the sales director at Talos. Caio Motta, senior solution architect at LATAM for Chainalysis, and Gladstone, a blockchain specialist for the Bank of Development in Brazil. So to get to it, I'd like to start with the following question. Institutions have been gradually embracing blockchain, but at different, with varying levels of adoption. So, Caio, I'd like to start with you. Which do you think are the biggest challenges institutions face when integrating digital assets into their business models today?
Okay, so I do believe there are 2 main challenges that I think they're connected to each other, which is first, lack of regulatory clarity. So we don't really know what's going on out there. Every single country has their own regulation, and a lot of countries don't have none, which is a little bit like difficult if you are a traditional financial institution that has a lot of different rules to follow, is used to very strict guidelines. So this is definitely something that, at least in our experience at Chainalysis, they have some concerns about. Besides that, I believe there is education. Many of these financial institutions, they don't really understand how the technology works, what are the risks they're exposed to, what they're supposed to do, how they can control the risk. And this affects especially compliance departments, fraud teams, fraud prevention teams, and both things work like holding hands. They're like walking together. And I think like one of the main things these institutions need to focus on is making sure that whenever you decide to integrate digital assets into your platform, you need to focus on educating your team. You need to make sure that your compliance team is able to move forward. Your compliance team is able to understand the risks they're exposed to, making sure that there is no, let's say, issues with the product roadmap. So I guess this is definitely something they need to pay attention to, education, and also making sure that all the rules and everything they know from the traditional financial system can be applied in the blockchain space. So they can also monitor the transactions, conduct KYC, understand the risks associated to these transactions, and making sure that whenever they conduct any kind of direct or indirect transactions in the crypto space, even perhaps just banking a cryptocurrency business, they're able to still evaluate what is the risk they're exposed to. So this is definitely something that I think is one of the biggest challenges institutions have.
Great, that's a very interesting perspective. Nisarg, what's your take on that same question?
Yeah, I think there's a couple of different things that institutions are kind of focused in, and Talos has been in a unique position where we've been working with institutions for 5 to 6 years since we were founded, and we're working on the infrastructure side, right? So a lot of these institutions and the conversations we had at the beginning of these conversations with the banks and other financial institutions globally was around just the liquidity in the market, right? So it's a very fragmented market and where you can find liquidity. That conversation is still ongoing, but I think a lot of those solutions have been solved for. And it's really interesting the transition we've seen in the conversations that they're asking for now, and it's more so around kind of how do we do more advanced compliance, or from a custody perspective, how do we manage our customers' assets, and how do we provide these type of services and smart order routing to our end customers, right? So with regulation, like you were talking about, Caio, with MiCA regulation in Europe, a lot more focus is going into how do we get best execution across the board and prove best execution, right? So a lot more of our customers and clients are asking for more tooling around compliance reporting or around hedging capabilities, and how do we either internalize risk or how do we kind of go out to the market in a little bit more of an efficient way. And that's kind of been the struggle that clients have had or institutions have had as they go to market in the correct way, right? So I don't think there's any doubt that the institutions are finally here. There's no doubt about that in my mind, but now it's kind of about the next step and like how do we really bring them to market kind of globally.
Great. Yes, it's important to highlight that. Gladstone, what is your take on the challenges?
Before anything, pleased to have me here. I would like to say that most good questions, the good answers start with it depends, right? And I really think that it depends on the scenario. Are we talking about public blockchains or permissioned blockchains, for example? When it comes, for example, for regulatory issues, permissioned blockchain is much less problem than public blockchains, for example. So I think that people talk a little less than I think we should be talking about these differences, because are you going to just buy a digital asset from a private blockchain? This is one creature. Are you going to buy a digital asset for the public blockchain? This is another total different creature. Are you going to issue some digital assets? Is this in a public blockchain, in a permissioned blockchain, or are you going to build your own blockchain? So these are so different situations, and I'm not totally sure that people are aware of these situations. It has a lot to do with education, as I said before. Depending on the scenario you're talking about, for example, governance is a big problem. When you're talking about issuing digital asset in a public blockchain, for example, you're losing a lot of control. If you're not losing control, probably you're not adding value. The difference among the government scenarios in these situations is big. So in all those scenarios, you have very big difference in governance, in the value that you really add into your customer, technical challenges. For example, in public blockchain, the technical challenges are much bigger, security, etc. And your business model itself. You're talking about integrating with the business model, but many times the big challenge is exactly having a business model that makes sense and add value to the customer.
Thank you. So Silvio, I would like to ask you, because Latin America has seen a great adoption in the last few years, but which do you think are like the opportunities and challenges that institutions are facing in Latin America, particularly?
Yeah, great. Thank you, Sol. So yeah, firstly, let's go for the opportunities. I'm more optimistic, right? So for opportunity, we see in Latin America super strong in the agenda of crypto, right? But as I mentioned before in my fireside chat before, that each country has a different is a different moment, right? And just what's important that is not just about regulatory clarity, which is super strong to have regulatory clarity. But if I have a regulatory clarity, say, yeah, you're a bank, you can touch in stable coins, you can hold stable coins, but we need to understand if the bank I want to do this, right? Want to do that, right? So, for example, an important thing that Caio was mentioning, that the institution, so the education part is super important. So, and nowadays is super this challenges. So sorry, I'm missing the opportunity for the challenge, but so the opportunity for, let's put it this way, to educate, right, the institution, it's key where the executive of big banks in financial institutions, they understand that what advantage I have about the efficiency if I started moving my business to like a stable coin, like a blockchain, what are the benefits on this, right? And so for the opportunities that, okay, we have a lot of different like scenarios of regulators. One of some countries is more advanced than others. And then I can include that Argentinian here and Brazil is the two that is leading this conversation. Argentina is starting to be on the top of the discussion now. There are a lot of Brazilians here, a lot of people from Latin America here at this event because of the new administration, right? Being super clear, signaling, saying that they're going to be like a more crypto or pro crypto, and then this is pretty strong, and also for Brazil as well, right? In the other side, if you talk about the challenges side, this is the important point. That the challenge side, that for example, Ripple has the 3 products, right? So we have payments, we have custody, and we have recently announced like stablecoin, right? And also we have a team at Ripple that's also work in the XRP ledger, even though people like think that Ripple owns the XRP ledger. Is not true, because Ripple does have one of 36 like votes. So it's very small vote in XRP ledger. So we have a full ecosystem, and what we understand that the challenge is really is like try to convince regulators for each type of verticals, from payments, for custody, and also stablecoin, that's blockchain comes to help you, right? Oh, here in Argentina, yes, dollar, all this is super like a super hot topic to control the dollars is a macroeconomy thing, but when moving this from dollars to stablecoin, we are not saying that you're going to lose the control, right? So this is a big challenge. It's like how, not just the institution, how we can like teach more the regulators the benefits of the blockchain.
Right, I totally agree. And speaking about adoption, I'd like to ask you, Caio, how do you think that blockchain monitoring, transaction monitoring can help build trust in building this crypto adoption?
Yeah, so I do think that we have a really good opportunity because of the transparency of the blockchain, of basically see everything that's going on chain. So we're able to identify risk activity. We're able to understand whenever there is an actor, a bad actor, a good actor using a bridge, a mixing service, what exactly is happening, where this money is coming from, where this money is going. And this is all because of the transparency of the blockchain, which also helps us estimate numbers connected to illicit activity. And that's like something that usually blows people's mind when we talk about it, but Chainalysis puts together every year a crypto crime report. And when we look at the amount of illicit activity globally, we are looking at $40 billion. Everybody can look at the number and be like, that's way too much. As a financial institution, I don't want to touch that. There is too much risk. However, we are talking about a $1 trillion industry. And if you take the number of illicit activity and compare with the total of activity, we're looking at 0.14%. Historically, it's below 1%. This clearly shows that the transparency allows us to identify this risk activity. And every single financial institution, crypto exchange, Web3 platform, regulators, government agencies can benefit from that in order to make sure that we build a safe and reliable ecosystem for every single customer, every single organization like joining that. So I think like transaction monitoring is a big part of that. Every single institution knows precisely what they have to do. They understand that whenever there is a customer signing up for their platform, they need to conduct KYC, they need to understand the activity, they need to analyze not only the activity, the transaction itself, but they also need to conduct a behavioral analysis. And I think like everything can also be done on chain and with a lot more information. So whenever a financial institution understands that and they understand what they can see, I'm confident that they feel much more comfortable in joining the space. And I feel like, once again, I mentioned about that before, Gladstone did, Silvio did, Nisarg did. I mean, education is key. We need to make sure that every single institution understands what exactly they're trying to do. Whenever they discuss crypto, let's adopt like a crypto product, let's evaluate stable coins, let's evaluate fiat on and off ramp, let's build infrastructure, custody or whatever. They need to assess precisely what the risk is connected to that and understand how the transaction monitoring works. So to answer your question, Saul, transaction monitoring is crucial to the way that the industry is moving forward. There is no way back. I understand that. I used to work at Kraken, so as some of you in the audience, I believe that a lot of people don't really like having, blockchain in the industry being touched by regulatory requirements, but that's the reality. We cannot escape from that. And the institutional adoption is going to be coming from it. If there is no trust in what we do on chain, there's absolutely nothing, no future without that. So that's what I think transaction monitoring means to the future of the industry.
Great, and I do agree that education is key, and I think that Chainalysis does a great work on that, so thank you. So going back to what Silvio said about stablecoins, I'd like to ask you, Gladstone, what role do you think that stablecoins and CBDCs will have in the future of transactions adoptions in Latin America?
In story of money, things that became money, gold, for example, they became first store of value, and then medium of exchange, and so unit of account. Stable coins are more or less in the collapse of money, if this is going to happen, you may lose store of value first, but unit of account is the last thing that you're going to lose. So stablecoin is more or less the medium of exchange, while the unit of account is still the fiat money, right? So I'm saying that we are going to have this unit of accounts with us for a long time. So even if you're exchanging and dealing with digital assets, you probably will deal with stablecoin as well, because it's the same environment, infrastructure environment. Is much easier to change value through this kind of resources. And I think if you are going to come into this world of blockchain, probably you're going to face somehow with stablecoin. But CBDC, I would like to talk about CBDC in the way that people sometimes think about it. People only think that CBDC is a stablecoin of government, okay? But I really appreciate the approach of Brazilian central bank. Drex is much more than that. Drex is a platform of tokenization, right? And to understand how great it is, you have to think about, have you ever watched a cowboy movie when the guy wants to buy a gun, he has money, and they stay like this, the money here, and you have the gun here, and boom! This is the deliver versus payment problem, right? In real life. So the deliver versus payment problem is something that's going to be approached by initiatives like DRAS, and I think that it's really, really important. And one of the things that I think it's really important about is because it will make people understand how serious these things are. Because people sometimes look at Web3 and think that it's just a nerd thing, or a thing that people want to be rich from the day to night, and I think that Drex will make it clear for everyone how useful these things can be, and how serious these things can be. And that's a very important thing that I think that we is going to bring. It's, again, about education, as Caio mentioned many times now.
Great. That brings me to the next question I'd like to ask you. We could continue with Nisarg. What are the biggest industry shifts you expect to see in the following 5 years?
Yeah, I think a lot of what we talked about already is kind of what we're seeing in fruition. If you asked 4 or 5 years ago, we would have all said the institutions are coming, the institutions are coming. And I think for us, we sit on the infrastructure side, so we've been working, like I mentioned, with a lot of these institutions, providing them the underlying technology to get their businesses off the ground. So I think we can firmly answer that question that institutions are definitely here. So we're seeing kind of the largest asset managers in the world, trillion-dollar asset managers in the world, the largest retail brokerages in the world are starting to really push forward with digital assets and offering either for their own institutional solutions or for their end, providing services to their end customers. And so we're seeing a lot of that activity on our side of the platform. One of the more interesting things we're now starting to see a little bit more in the FX space, or in the Latin American spaces, specifically within FX, right? So We talked a little bit about CBDCs, we talked a little bit about stablecoins, and FX, specifically within Latin American markets, has been a challenge area for a lot of these institutions, right? So I think we're going to figure that part of the solution out, and we're already doing some of those toolings currently for some of our retail brokerage customers that are here in the Latin American region, whether that be in Argentina or in Brazil, where we're offering them the ability to efficiently provide their end customers local real or local peso pairs for Bitcoin exposure, right? So a lot of these customers, they can't interact with a USD market, right? They need some type of BRL on-ramp portion or an Argentinian peso that allows them to connect with BTC and BRL and BTC and Argentinian peso rather than just using stablecoins. So I think that's an industry shift that we'll see a lot more, and how do we provide those type of solutions for these type of customers, specifically within the emerging markets. And so I think secondly is we've talked about this a lot as well, is regulatory clarity. And so one of the things that we're seeing now is I think we could finally collectively say we see the light at the end of the tunnel. We know what the regulatory clarity is going to somewhat look like, or what the framework is going to look like. And that's a direct impact on what we're seeing from the institutions, like I mentioned, coming back to the market. So they are seeing the light at the end of the tunnel, so they are now starting to push forward with more solutions within digital assets. And so I think that's going to elevate the entire industry in terms of not just, now we're going to have a new level of benchmark from a regulatory perspective. Like, here's what you can and cannot do, and now here's the green light to go work on new solutions, whether that be around the CBDCs, like moving from these pilot projects into an actual real-world use cases. So I think that's kind of the next step now that we have some clarity and then of what's next.
Great. And could you share if Talos is working on any of those solutions you could share with us?
Yeah, so like I mentioned, we're working with some of the providers that are here down in the Latin American region, which is a newer region for us, but we provide some of that infrastructure to allow them to provide to their retail customers a trading solution that's local to their FX. And then we also work with some of the largest financial institutions from the buy-side perspective, or the banking perspective, right? So financial institutions and banks that are providing services to their end customers or using their own proprietary cash and carry trades, they're using some of our infrastructure to kind of go to market a lot quicker and allowing them to connect to the Ripples of the world, to the Chainalysis of the world, into one unified solution.
That's interesting. And Silvio, what's your take? What do you think is going to be the biggest shift in the following 5 years?
Yeah, I agree with my friend Nisarg that definitely payments, right? But payments not in the way you may see like a fiat to fiat, but real payments like on-off ramp, right? So people that have like stable coins that want to send like a fiat to the other side of the world, people has fiat and want like a right on ramp send like a stable coin to like other wallet. So I'm seeing that. So this is where Ripple has been working for the last 10 years, right? It's, one is to create the rails, right? To create to attend the 90% of the FX market in the world. And also Ripple will be seeing that we are prepared for like people that will have like a stable coin here. They want to like off ramp. We can do it. This is for them, for the financial institution, and also the opposite. So for sure, also super aligned with this argument. That's the regulators for sure, right? Any kind of a crypto discussion about, we talked about like clarity. And we want to, of course, we want the incumbent and banks like to move on this world because, of course, the fintech is going to move. When you see, for example, in Brazil, Argentina as well, right? And people, you can see clearly the FX industry, the traditional FX industry, is starting to go and thinking to move on to crypto, like evaluating FASP license. In the other side, you can see that, for example, the crypto exchange offering FX services. So it's clearly like a merge there, right? So this is like already sharing that the fintech world, the crypto world is being like a super like is working with on stablecoin to get all the efficiency about stablecoin, and so it's super important also like you see also the big like large financial institutions to come to this conversation as well. So I think this is going to happen for sure like in 5 years.
Right, let's hope so. So we have some minutes left. I don't know if Gladstone or Caio, you want to answer that same question, or if there's anything else you want to share today with our audience.
Yeah, just to give like my 2 cents as well on the same question, I think like definitely payments is a key point on the future of the industry. I think like also we're gonna see a much more tokenized financial sense, financial traditional financial, and basically everything connected to finance is gonna be much more tokenized. There is no escape from that, I believe. And at the same time, I believe this is gonna be coming with a lot of risk, something that is already happening nowadays because of lack of education, perhaps the lack of regulatory clarity as well. But something that I do anticipate from a risk perspective to take place is a lot of AI being used for that purpose, just like face recognition, everything that we know about KYC, everything that we know about controls that can be established by crypto exchanges or traditional financial institutions in a way to identify if a user is actually the one conducting a specific transaction. I think this needs to change. That's going to be required to change because of the illicit activity taking place. At the same time, I do believe that Web3 is going to be fully connected. It's going to be a reality. We are no longer going to be talking about Web2 and Web3. Like 20 years ago, we used to talk about, I don't know, 30 years ago, like internet becoming something new. Right now, nobody talks about how the word was before internet. I think the same thing is going to happen with Web3. I think we're going to be seeing like a much more decentralized space, and that's being connected with the industry. And of course, that's going to be coming with risks as well. Whenever we look at illicit activity, let's say everybody here is probably familiar with the Bybit hack that took place, the largest hack in the history. $1.5 billion were stolen by North Korean hackers. I think like this clearly shows that every single institution is going to be targeted on that. And understanding what are the security threats, establishing controls over that is going to be required. So I do anticipate in next 5 years, even less, a much more risky, different threats, but a much more robust industry that's going to be able to fight that together, making sure that you have the proper controls, making sure that you have proper education, and that's going to be definitely key in this whole process a few years from now.
Great. Gladstone?
First of all, I think that in 5 to 10 years, we have a lot of consolidation, especially in the Web3 market. The number of experiments that we have today, the number of cryptocurrencies we have today, is something that will not stay here forever. So as much as this market becomes something more, integrated with traditional finance, and the people started to understand what the real value that has to be delivered to the customers, etc. I think that is going to be a lot of consolidations. We have dozens of thousands of cryptocurrencies nowadays. It's not reasonable. I think that we are going to watch the emergence of new ecosystems somehow, because sometimes I think that people lose the sight that blockchain and cryptocurrency, etc., is a lot about building ecosystems. Sometimes I see some proposals of some companies trying to build something alone. For me, it's always more or less weird. So it's going to happen if ecosystems are to be built. Because if you have sole winners, this is Web 2, right? This is not Web 3. So I understand that even with and it's going to be a very big challenge to traditional finance, because they are not exactly prepared to that, right? Sharing things and losing control, this is not easy for a traditional institution. So I think that we will watch these ecosystems emerge somehow, I don't know exactly how, and a lot of consolidations. And people will have to really learn what this blockchain thing is going to bring to value to customers, as I said before. It's going to be beautiful to see this happening.
Right. And as a blockchain specialist in the bank you work for, is there anything particular you're working on, or you could share about what you're doing in the bank?
Yeah, in fact, it's very interesting because I have two hats here, right? I'm here talking more about like a professor of of blockchain and crypto economy, etc. But in BNDES, we are in the business of building a blockchain, a very different kind of blockchain. And sometimes people make a confusion among me and Fabio Araújo. They are more or less similar, no head. And have RBB and Drex that are more or less similar. RBB is Rede Blockchain Brasil, is blockchain Brazil network. It's a blockchain for, is a public permissioned blockchain. It's a very different creature. It's a kind of permissioned blockchain that wants to be as public as possible, because the idea is to increase the use of blockchain for government processes. Because everyone understands very well why blockchain can be interesting for financial services. But for me, it's a little confusing how people don't see that it is even more interesting to government. Because we're talking about the trust machine, and trust is everything the governments nowadays don't have. So that's more or less what we are trying to do. Not alone is a decentralized infrastructure. And I'm going to be talking a little more about that in a panel at 5. So if you want to know a little more about it, I will be there. Thank you.
Great, thank you. Well, it's almost time to wrap up. I don't know if anyone wants to add anything, or we're okay.
I can add.
Go ahead.
One thing I wanted to add here was, like, I think we all kind of said it, saying it in different words, but we're all seeing the convergence, as you mentioned, between traditional finance and within crypto native people. And I think we're all seeing that all assets are becoming digital assets, right? So that's something that we have a firm belief here at Talos, and we're kind of seeing that on a day-to-day basis with the clients that we're talking about too. We're talking to on a daily basis, where some of our traditional finance clients are coming to us and say, hey, we want to look at our digital asset portfolio kind of right next to our crypto or our traditional finance portfolio, right? Like, we want to see the risk exposures. We now consider it all as one piece of the puzzle and a part of a balanced portfolio. And then at the same time, we're seeing it on the other side from our crypto native customers that are now looking at equities that are crypto adjacent equities or ETFs now that they're approved. And they want to see all of those positions from a single point of view, right? So we have portfolio management tooling that is allowing these customers to kind of look at it from both sides, and that connects into the Chainalysis, like I mentioned, and Ripple, that allows us to kind of provide, all of us collectively, to provide these solutions that appeal both to the traditional finance customers as well as the crypto native customers.
Right, thank you for highlighting that. So it's time to close. I want to thank each one of you for your contributions and insights. It was really interesting. And thank you all for joining us. I hope you can enjoy the rest of Merge Madrid. Thank you.
Thank you.